Hi, this is James Ng with Old Capital, and I've got Trevor Thompson on the line with me. Trevor, thanks for jumping on. Are you
Yeah,
coming in
it's my
from?
pleasure to be here. As I mentioned before I got here, I'm a little nervous because you're so smart and a lot of the stuff you know about financing, but super important for people that are what I'm going to refer to me as more of an emotional investor, actually follow and study people that are analytical investors. And that's why I always enjoy watching your podcast because I learn so much.
Well, I appreciate you coming on. What I figured we do is I'm going to pull up some slides, and we're going to run through them, sort of rapid fire as much as possible. So here we go. So this first one. Um, so I pulled some stuff down just, from the social webs. And so to kick it off, maybe give people your background and sort of your passion and sort of what you like to do.
Yeah, so I posted this. Am I the world's most interesting man? Somebody commented that I was, and it's because I have a super unique background. So I'm originally from Niagara Falls, Canada, which is why my company is called Niagara Investments. I actually started working with Guinness World Records at age 30, or Ripley's, believe it or not, pardon me, at age 13. Then I switched over to Guinness World Records and worked for them for 18 years. I ran a franchise location in Niagara Falls, ran a company owned location in the Empire State Building in New York, opened up a franchise location on Hollywood Boulevard, which is where we ended up giving Michael Jackson a Lifetime Achievement Award. So I actually went to lunch with him. And then I switched over and I wanted to open a Guinness in Orlando, but it fell through. So I opened a year round haunted house of all things. And then I got recruited by iFly Indoor Skydiving. I spent over 20 years with them and I opened 46 of our 80 worldwide locations. So it was a great journey. Also, some cool adventures. So, right when the Iron Man movie came out, Robert Downey Jr. actually came and flew at our Hollywood tunnel. So, it was really cool to meet him. Super nice guy. And then since then, I've now invested in 20 real estate syndications.
All right. So let me recap that. So you're originally from Canada,
Yeah.
worked for, or you opened some Ripley's and
Yeah, I
believe
worked
it or
for
not,
Ripley's, then
yeah.
Guinness, then a haunted house. And I did a bunch of consulting gigs in the middle there. And then eventually for iFly Indoor Sky was my last. And I did end up losing that job during COVID.
All right, so how do you go from all of that to now your focus is on real estate? Like
Yeah, so it's
where did that
very
shift happen?
interesting.
Yeah.
When I got Rich Dad Poor Dad actually at the very first team meeting of iFly. I read the book, my mind went wow, and I did what everyone else did. I put it on the shelf and I kept doing my corporate job. And I always thought, I don't have time and money. I don't have time and money. I don't have time and money. And then iFly actually got bought out by a private equity company. So I no longer had the excuse I don't have money. I just didn't have time. So I started looking into real estate investing. And, I started where everyone else does. I looked at single family and thought, no, this is too much like, I don't even like fixing stuff at my house. Why am I going to make that? And then once I got down to real estate investing with apartment complexes, I've just had this big ha moment that I was buying a business. I was running a business and it's super related to me. And then I thought to myself, all of the skills that I've applied in all of these years of opening up businesses, incremental improvements, growing the bottom line. We called it EBITDA in the entertainment world, we call it NOI in the real estate world. And I actually spent most of my career increasing EBITDA. All of my jobs, I was measured on EBITDA. Everything was measured on EBITDA, which is earnings before depreciation, interest, and taxes, very similar to NOI. And so all of a sudden, all these lights went off. And then I started understanding, things like leverage, which don't always apply in other businesses like they apply so well in the real estate game, all of the depreciation and tax benefits. And this big light bulb came on. And to be honest, then I just started passively investing because I did have a full time job. I didn't have time to be on the active side. And I started passively investing. And then I actually, while I was passively investing, I was a volunteer, helped out asset managing one of the investments I was in that was struggling. And I just started falling more and more in love with the day to day. And it totally like captured me. And I had no idea it'd become this passionate about real estate investing. And now, you can see on my goal to help 1,000 people reach financial independence. It was like none of those light bulbs came on till I went through these series of things. But wait a minute. For me, this is a great thing. This is a great thing for others. I can provide mechanisms for people to get passive income, create their future to financial independence through passive investing. And it was amazing. All those light bulbs came on, and everything I'd done up to this date, in theory, leads me to be a strong asset manager of apartment complexes.
All right. Let's jump in. So, when you're thinking about that transition, a lot of people are like, all right, do I go the IRO, independent rental owner, like buy a deal by myself? Do I go my general partner route or my LP route? So take me through that process of how you thought about that.
Yeah, so I definitely had no interest in being an independent owner. I was still fascinated and still am by Airbnb, and I'll definitely go into that space. But it's a space that's going to dedicate a lot of time to it, and it wasn't going to build my financial independence as quickly as apartment investing could. So I went directly into LP. I understood the power of taking the money that I had, pulling it out of the volatile stock market and putting it into something, a real asset. And then as I got going and started to fall in love with it, I thought, okay, this is something I can do. And then, of course, losing my job made the decision, okay, well, I'm going to go a lot quicker into being a GP. And so that's when I made the transition. But I'll always be an LP, and I'll always be an LP in my own deals that I'm a GP as well.
Okay, so you're LP and GP right now in those two
Yeah,
roles.
yeah.
Okay,
So right
gotcha.
now, I've done a total of 18 just LP and 2 as a GP, and 5 of the LP ones have gone full cycle.
Okay, perfect. All right. I saw this on LinkedIn. I thought it was hilarious. This is I think from Pirates of the Caribbean
It
or
is.
something, and Jack Sparrow is trying to run away from all these people. So talk to me about the current environment and sort of what you're seeing, right? Because obviously I see stuff in my seat, but I'd be interested to hear what you see in your current in your seat right now.
Yeah, it's definitely like this. Like the amount of as I've gotten more and more connected with people, the amount of deals that come across my desk are staggering. Absolutely staggering. And I really do have some method to my madness of what I'm going to do. So I invest first in a person. So I find somebody and I spend up to a year looking at that person, talking to that person, researching that person, getting to know that person well. Then I have the next thing, which is okay, do I have funds available to make an investment, and what type of investment? So I call that the jockeys first, then the horse. And the horse is kind of like what I'm going to call the asset class, whatever it is, I'm going to do. And I'm in a variety. I'm not just in multifamily. And then the track is the location. So let me give you an idea of how these things line up for me as an investor. I spent a lot of time getting to know somebody, watching the deals that she was sending me, becoming a really good friend with her. Actually invited her to one of my first GP deals. Unfortunately, that fell through, didn't happen, but we got closer and closer. So she was somebody I was interested in, and she'd sent a couple of deals that just the other boxes didn't check. Then next thing you know, she sends a deal, and I've been thinking about the asset class of storage. I hadn't done any investments in storage, and so I wanted to get one investment in storage. I hadn't done anything in the Carolinas, and this investment happened to be just outside of Charlotte, North Carolina. So I went, okay, this is the trifecta of things, right? So a relationship with somebody I know, like, and trust. The rest of her partners, I knew about them. I didn't know them as well as her, but I'd heard very good things about them. Again, an asset class I wanted to invest in a location I wanted to invest in, and then I decided to invest.
All right. So you sort of have a checklist to some extent,
Yeah.
starting with the sponsor, then going into the property, then going into the market or location
Yeah.
that you're going into. All right. So to me, what's been impressive and remind me again, do you live in Austin or San
I
Antonio?
live in Austin. Yes, sir.
You live in Austin. but I feel like I don't. I mean, I go to my conference or our conference, the whole Capital Conference, but I don't really go to that much in terms of networking
Yeah.
and meetups and conferences. So how do you do that? And we're gonna limit this slide to in person.
So
How do you think about networking, which conferences to go to, which meetups to go to, and then if you have your own, tell me about your own.
yes, so I'll start with my own. I co-host a Joel meetup with Joel Fine here in Austin through MIFN. It's the first Monday of every month here in Austin. We get anywhere from 45 to 65 people. It meets once a month. This particular meetup is run by Ken Harris, who you can see standing there, and he was one of my early mentors. And this meetup is every Tuesday, so I'll be going there today for lunch, and I go that one on a very regular basis. Then what I try to do is I try to find meetups in other locations, such as Old Capitol, where there'll be a very good mixture of people coming. So it's going to be people from all over the country, but not always kind of what I'm going to call the same people. And so I'll make sure that I go to something like that. Then I've been to Rod Khleif's, Jake and Gino's, because again, even though it's a lot of their students, it's a lot of people. And then the same with the best ever. The best ever isn't necessarily, Ashcroft Capital focused. It's quite a variety of people. So I do those. Then on a local level, I try to go to a meetup in Dallas once a quarter, a meetup in San Antonio once a quarter, and a meetup in Houston once a quarter. And so I'll try to plan those out. And then sometimes I'll go to the same meetup over and over again. And it's good for me because I'll get invited to be on a panel. So last week I was on a panel talking about horror stories, which you want to talk about. What panel before that? I was at Disrupt Equities event talking about passive investors. So I try to go to these things and then offer myself, hey, and of course that gives me some credibility being able to get up on stage.
So, when you go to these networking events, what is your goal?
Yeah, so and I want to go back to, you wouldn't know it for all the events I go to, but I'm an introvert. So I get so, Simon Sinek does a great explanation of an introvert. An introvert wakes up in the morning with 5 coins, and when he gives his 5 coins away, he has nothing left. An extrovert wakes up with no coins, and everybody he meets deposits a coin in his bank. And so these events are very, very tiring to me. So I have to really plan myself. So I'll go in little phases and say, okay, by this time, I want to meet 4 or 5 people I have not met yet. And I try to start off with people I have not met with because it's easy just to go back. I found myself falling in the trap of going and meeting people I already knew, right? Because that was easy, that was comfortable. And all I do is I try to connect with people, ask about them, see if there's some sort of synergy, and then try to get a card and say, can we set up a time to talk again later when it's more convenient? And then I follow those meetings up with, a follow-up in-person Zoom, well, not in-person, a Zoom meeting, because half of the time they're all over the place. And I just, by going all the time, it's quite interesting. And then I'm very active on social media. So it's been quite interesting that a lot of people will recognize me. And, the first time I went to a Jake and Gino conference, like I got in the elevator to go check in my room, and like I was doing selfies with some people that knew me and saying, I got to get a selfie with you. You're famous. And, I always joke with Merrill Kessler, that he claims I like his Facebook posts before he posts them. It's not true. I wait till he posts them. But whenever I'm there, I say, man, we got to get a selfie together. And then Garrison Gilbert, who's very famous on the Rod Khleif side, hey, we got to do a selfie together. And I try to connect with people that do that. And it's good for both of us.
So this is in-person networking. You sort of
In-person networking.
so we'll skip one slide, but going from uh, in person to online,
Yeah.
obviously COVID accelerated a lot of things. How do you think about networking online for whether you're LP or general partner?
Yeah, so it's an amazing tool, to be honest. I'm going to talk about Julie's Zoom at 8. You know, she's part of your team, and I'll be honest, it was one of the first ones that popped up. And you know, I've been such a regular attendee. I've got the Zoom at 8 T-shirt. Should have actually wore it for this podcast. She'll give me heck for not wearing it. And you know, and it was amazing because I started meeting people from all over. And so I started putting in the chat, hi, I'm Trevor. I'm based in Austin, Texas. I'm looking to be boots in the ground in Texas. And the number of people that connected with me and said, well, we're looking at a deal in Texas, but we don't have anybody in Texas. Are you know, will you help us out? Are you interested in this? This sort of snowball effect was incredible. And then, of course, we went back to in person. And so now, you know, I always post, and I did it for going to Old Capitol. I, you know, make a social media post, I'm coming. And a lot of people will reach out to me and say, well, let's make sure we connect. And so it ties the two together to actually nothing better than in person. I'm not going to give that up, right? In person is incredible, but online has been absolutely life changing, to be honest. And I don't think it will go away.
Right. So we talked about you mentioned a couple of these, and I wanted to ask your thoughts. And I don't know if you're a part of any mentoring group, but it seems like people who come from, let's say, a corporate background like yourself, and then they step into this world, they join a mentoring club. And so and I don't know what your stance is actually on this. So that's why I was gonna just throw it out and see
Yeah.
how you think
Yes,
about it.
so I actually joined a club that I don't necessarily mention too much because they didn't teach as much as I wanted. They were really single family and they did have some commercial, and it was my start. But the next one I joined was James Kamasami's Achieve Investments, and I actually didn't even mention it. I host a virtual meetup with him now, the third Thursday of every month, and the focus of that is educating passive investors. You know, he wrote the very famous book, Passive Investing, and him and I, you know, we've connected and we do a lot of things together. If I had a nickel for every book I recommended, I could retire, you know, because it's a fabulous book. But I've joined that club. I'm also part of Apartment Educators, but everybody should join something, right? You should join some sort of mentoring program. They all have negatives and positives. There's not one of them that's perfect, you know. So clearly, if you're Dallas based, Sumrock is one of the more powerful groups. If you're looking for, you know, to go from smaller apartments to bigger apartments, Jake and Gino, you know, they've got a really good program. And in fact, I'm best friends with a lot of people there. And I'm also pretty involved with Rod Khalif, and I'm going to another one, Think Multifamily, the first time to go to their meetup this December, just to connect out with a new group of people. But everybody who wants to get serious about apartment investing, even as a passive investor, should join some sort of networking group at some level.
All right. All right. So you said you read a lot of books, and so I didn't pull in all of yours, but I think this was one of the first ones or one of the latest, and you had the 10x rule on there, and I did
Yeah.
not. I think you talked about lessons learned. Maybe give us the one lesson from this book.
Yeah. So basically take what you think is what you're going to do and multiply it 10 times. So for example, I really believed I could get 100 people passive investing, and I went, 100's not impressive, man. I'm going for 1,000 people. You know, and I'm just going to set these goals really, really high. You know, it's all about multiplying your effort. And this year I've been very active on social media and being on different things. You know, I read this book at the end of last year, and then I watched some of his podcasts, and he talked about omnipresence. And he said, if people don't know who you are, it's your fault. It's not theirs, it's your fault. And that's why I'm everywhere, because I want people to know who I am, and I want to be somebody that can bring value to people looking to passively invest and bring value to people that need someone on their team in Texas. So
So I
this is
think
all about applying it. And it's kind of funny. Sometimes when I get really burnt out in an event, I close my eyes and say, what would Grant Cardone do? I mean, again, he's arrogant. There's lots of reasons not to like him, but man, the man is a machine. And when I get down and I get tired in an event, I think, you know, he would go get 10 more business cards, and off I go.
the I think when I heard him speak, he was basically like, I don't want to have to introduce myself to anybody.
Yeah.
Like when he walks in the room, he doesn't want to introduce
Yeah, and
himself to
whether you
anybody.
believe
So
in his real estate investing paralysis or not, and whether he's going to implode with how quickly he grew, but I heard somewhere he's getting close to the $5 billion worth of real estate. That's not a shabby amount of money,
right.
and and he's done pretty well, and he's brought a lot of focus to real estate that was not there before.
Is there any other book that maybe you've read either recently or in the past couple of years that you think everyone should read?
Yeah, so this is one of them, and then followed up with Be Obsessed or Be Average, and do both of them in Audible. And then a really good book, and I actually just did a review on it this morning. It's called The Go Giver. And it talks about being somebody that's a go giver, giving people, bringing value to other people. And that's something that I think is hugely important. People want to get value, right? I mentioned earlier, I watch all of your podcasts and stuff because you bring me value. I learned something, the way you analyze something, and people gravitate towards people that bring value to them.
Absolutely. Let's all right. So I saw this on one of your posts, and so you live in Austin, but
Yes.
then obviously everyone understands Austin and all the dynamics on the tech side of it. But why San Antonio?
Yeah. So I call San Antonio baby bears porridge. It's never hot. It's never cold. It is just a solid, blue collar worker community, right? Now, don't get me wrong. There's a lot of medical there. There's a lot of high paying jobs there, but San Antonio is just like this market that keeps growing. And it's very, a lot of people don't realize the seventh largest city in America. It doesn't get the attention of an Austin, Dallas, Houston, Phoenix, all of those other big markets. So I really like San Antonio as a market. And because it's just, if you know the city and where you're going to invest, I think San Antonio is a solid market.
Are your are your two general partner deals, where are those located?
One's in San Antonio, closing next month, and the other one is actually in Columbia, South Carolina. I wanted to get something in the Carolinas, so I got one in North and one in South.
Gotcha.
But my focus is San Antonio.
Gotcha. So you're going to be doing this a little bit later.
Yeah,
Maybe give us one lesson as a teaser.
yeah. So one lesson is, I talked about it already. Who you invest with. Spend some time to get to know them. Right? It's really baffles me that somebody will. Oh, I look at this They'll send me a presentation, and I'll say, "Well, do you even know who they are?" No. Well, find out who they are first, right? We all look good on the internet, right? We all talk about all these things, but you want to find out who you worked so hard to have $50,000 after tax dollars, and you're going to give it to somebody. Make sure you're giving it to somebody that you really, really know, like, and trust. And then all the other metrics, again, make sure it's the asset class you want and the area you want to invest in, right?
Gotcha. Um, so now, I mean, you talk to a lot of GPs. You are a GP. What if you could boil down maybe one or two best practices that you've seen general partners do, whether it's monthly, weekly, annual, or even just on a deal? Any best practices out there for GPs?
Yeah, so to me, the best practices are communication. And in all the deals that I've been, I'm at both spectrums of the communication, right? I invested in the deal, and literally for the first 3 months, they gave weekly updates. I was kind of like, it wasn't long, but it was super incredible. So that's one end of the spectrum, right? And the updates, they weren't deep. I've got other investments that give me deep updates, but it really gave me a comfort level. I have another investment, and at the end of the first year, I asked a question at the webinar. Could you tell me how the first year did compared to the performa? The answer was, the performa's in the PPM. You can look it up. And I thought, what? I gave you $50,000 of my hard-earned money, and you're going to pass the work on to me and say you can go look it up? Incredible, right? So if you're a GP, first of all, answer your LP's questions. Go out of your way to give them good value and help them understand how is the business running, and don't hide things that aren't working right? So my biggest winner at the first quarterly meeting, they were talking about, man, we're struggling here. Like we walked in and we found out a lot more and this and this and that. And this is our plan to get to it. And then the next quarter update, here's what we've done from the first quarter where we've learned. We're going to here. Well, let me tell you the happy ending. 20 months, 3x my money. Okay, so the first 6 months, you would think, oh man, what a dumb investment I made. No, they were just honest with us and they told us where they were going, and then they got there. And yes, we rode this crazy wave of hot real estate market, and 3x is not going to be normal, but I'll take it. But the honesty is what really impressed me the most.
What do you think, general partners? I mean, the summer has been a little choppy. Even right now is a little choppy for general partners. And so not everybody, when I talk to general partners, they might not have a deal under contract for 3 months or 6 months.
Yeah.
What do you think they should be relaying to their limited partners or their distribution list?
So I've seen several emails that come out, and I actually took the time to read them, why we decided to walk on this deal. Like we got to this point and we decided to walk on the deal. Sharing that information actually, and again, I get a bazillion emails from people, right? That one actually got my attention, and I stopped and read it and listened to it because I wanted that helped me learn more about their credibility, right? Because what happens a lot is we just edited the Excel spreadsheet to make the deal look like the returns we think you want to get. That's what happens a lot more behind the scenes than I'd like to admit. But the fact that they passed on it, that was very interesting. And then clearly we're going into a phase where operational excellence is going to be super important, right? We're not riding this big wave of low interest rates, rapid rent increases, all of capex compressions, all of these other things. We're in a different phase. And so, telling your investors, what are you doing to maximize, right? Hey, 10% rent increases aren't realistic anymore, but here's some other ways we've gotten creative. Here's what we've done for tenant retention, and we've decided not to renovate the units, and here's the reason why. I've had some of my deals that have said, hey, listen, we've decided to hang on to a little cash in case we get a little rough. And this is what we've done. This is how we pivoted. These are the things that GPs should be telling their LPs.
All right. So I did not prepare you for this question. I didn't prepare you for any of them, but the 18 deals that you're in, you said as an LP.
Yes.
What percentage of those are still distributing cash right now?
So some of them won't because they're new builds.
Yep.
So they won't distribute cash.
Okay.
I would say about 2/3 of the one that are supposed to distribute cash are, and 1/3 is not.
Okay.
And again, some of them are not, right? A new build apartment complex. I'm in a couple of land deals on new build storage. They're not going to produce cash. They never were intended to produce cash. But the ones that are supposed to produce cash, I think 2/3 of them are. They're not hitting their metrics, so most of the deals I'm in, it's a 7 pref, and they've been paying 3, 4, 5, but they've been paying something.
Gotcha. So before we get into the next question about LP best practices, if you were to give me sort of like the box of what you invest in, what would be that box?
Yeah, so we already talked about the who and the asset classes. And then what I look for in general returns is I like a preferred return. And I like it to be reasonable, 7, 8%, pref return. I've passed up on these deals that offer 10, 12% pref. I think they just made it look, they put lipstick on a pig and tried to lure me in with, if they don't achieve that, they'll just lose interest. I like to get at least a 16 IRR. IRR is the number I look at the most because it's kind of what I refer to as the equalizer. And I look for something that's on an average of about 16 IRR. And then clearly on the deals that aren't cash flowing, I look for more than a 2x multiple in 3 years. So like a new build or a land deal.
All right. So you said you did 18. deal so far. Like in terms of best practices, anything that you wish you could have told yourself when you were getting started as an LP that maybe could have prevented you from getting into a deal, or maybe would have had you commit to a deal that you maybe passed on? What sort of things would you wish you have told yourself
Yeah.
back? When was your first deal?
It was 2018.
2018. All right. So take yourself back to
Yeah.
2018 based
So
on what you've learned.
I would have gotten a little more educated to understand some of the basics. So, for example, one of my first investments, I didn't understand a lot of the things that were happening in the real estate market, and so I looked at their rent projections. And when I look back at their rent projections, and you look at the economic of the area, like 1 mile from the apartment complex, they couldn't meet the rent expectations at 3 times income. And I didn't know that, right? So now that's just like a quick go-to, right? Like, hey, if this area makes $36,000 a year, how much can they afford on a top max rent? So I did not understand that. I didn't understand it, so getting a little more educated. And then two things really kind of snuck up on me. I hadn't heard of them, and there's been a lot more talk in the Texas market. The aggressiveness of tax collection. So my first two deals, tax collection and insurance increases, wiped out all proceeds. They just did. Just the fact that, and one of them was a bridge loan that was only had a little bit of term left, and they couldn't stabilize and get out of it. I didn't understand that at all, right? A lot of people think, oh, we got a bridge loan and it's this many years and we've got these options. What people don't realize is if you're not performing, you don't exercise the options. And so then they had to scramble and do other things, and that put the deal in jeopardy. Finally, it did close. We all got our capital back. No one lost money, but we didn't earn money really from those three big mistakes that are, big red flags early on. And then I didn't go visit it. It's 2 hours from my house, and I didn't go visit it. And this was the one I actually volunteered to be asset manager. And literally, I pulled into the parking lot and I sat there and went, oh, goodness me, I've invested here. This is really rough. Like,
This is your baby now.
do I need a gun to get out of the car? And make it even funnier, I did actually have armed security for 3 weeks, walking people. We had some issues going on. I got on the news for a stabbing, all of those things that you just don't want to be involved with. But we did manage to turn it around and get things going. But that is part of deep value add, right? So really understanding the difference between deep value add, and when you're repositioning a property, it's a big lift.
Yeah, I mean, I think one of the things that I liked about being a limited partner is that you get to see. I mean, you're the airplane analogy is you're going along for the ride,
Yeah.
but the general partner is the one flying. But you can definitely look out the window and see a few things as
Yeah.
you ride along. So,
Yeah. And then also
yeah,
too on the LP side,
yeah,
you know, I try to not be the Monday morning quarterback, but I try to ask questions and really let them know that I just want to learn for my own benefit, right? I want to understand. I'm on another deal, right? And we had a fire and they didn't have replacement costs. And it's radically affecting the deal. And so now I'm rethinking, wow, that's something I've got to think through. And replacement costs, especially in the last years, made a huge difference, right? Because everything's rapidly increased. And so little things like that, but don't be a Monday morning quarterback, right? Try to see how you can learn and be helpful at the same time. And nobody likes that pain in the neck investor that always questions why not? Why didn't we do that? Why didn't we do that? Why didn't we do this? Like at some point, you just want to ask some clarifying questions to build your database and then make a decision. Am I going to continue to invest with these people in the future?
what questions do you typically ask, or do you ask any questions? Let's say, all right, the sponsor, you're on their list, they send you a deal, you drive by it, you like the deal, rents sort of make sense, the loan looks good. Do you ask any questions to the general partner? Do you call them? Do you do anything before you send the wire of 50,000 or 100,000 and fill out the paperwork? Or are you pretty, you maybe listen to a webinar that they do and there you go?
So
Or
I
what? Yeah.
researched them a lot before I get to that phase, so I'm
Right.
pretty comfortable. But I will ask clarifying questions. And again, we've talked about some of the basic ones, and one other one that I talk about is the speed of which they're going to execute their plan. Because again, I'm normally in value add, right? And what a lot of people need to understand is, you don't just walk in there day one, throw everybody out of the apartment complex, renovate them, and get $500 more rent, right? It does not work like that. So how do you plan to balance this out? So if anyone tells me they're going to reach stabilization in less than 18 months, I'm going to ask a lot more clarifying questions, right? So, and sometimes it is a case, hey, we're buying a place, they've just had a big purge, they got rid of a bunch of people, or we had a fire and we rebuilt, whatever it is, but you want to make sure you understand their story, and their story is realistic, right? Because if you go in there and throw everybody out and then renovate and then try to re-rent, you could be in a sad position versus a very organized plan to succession, right? And then, what phase do you do that, right? So that's very important to understand this trajectory to get to here, because that's really when you start making your pref payment, right? By the time they reach that stabilization, you want to make sure that their plan makes sense and they're going to catch up within 18 months, let's say.
So this isn't on the slide, but this is a question I seem to always ask every LP is best deal so far and worst deal so far. And you can give as much detail as you want.
Yeah, so the worst deal was that one investment I talked about, where I volunteered as asset manager. Only received my capital back, and but again, I learned a lot helping out on the asset management side. So the education was three, and then my best deal ever was in Tucson, Arizona. And that was the one, I studied. That was my first investment out of Texas. I studied the syndicators for up to a year. I actually attended, they had some training, asset management training, and I paid and went to their course. I invested in their deal, and 20 months, they 3x'd my money. So very happy. And they had a deal right after it, and I reinvested the original investment again.
So on the deal that was quote unquote the worst, is there anything that the general partner could have done to save that deal? Or was it really just the price and the loan and the area? Like there's too many things. They were just trying to rolling that rock up a very, very steep hill to get it over.
Yes.
Was there
So
yeah.
I definitely think there was. So I was a volunteer for 10 months. And of course, I can always say what I did was perfect and got it. We were almost at that stabilization point, and they got in a hurry to sell and get out. And so they filled it back up with who we all evicted, to get that occupancy up, to get the rent roll up so that it would look, we were at 88. They wanted to get to 92. They wanted to show, hey, we're here. And that last percent, the sale didn't go through, and
Hmm.
now they had the same problem. They had a lot of delinquencies, they had a lot of bad debt. It took 3 sales to actually go through, and by the end of it, they were actually managing the property with temp labor. You can imagine a deep value add distressed property managed by temp labor. So they ended up with an $820,000 retrade of things that deferred maintenance, and that $820,000 was my profit and their profit.
Right.
And but because they just reached this point of you were just too much water was coming in the boat. You weren't going to save it.
Um I keep every time you tell a story, I have another question for you. The let's say one of those deals, the general partner comes back to you. I think we're going to see this in the next 6 to 12 months. The general partner comes back to you and says, "I understand you put in 100,000, but the Fed is pushing rates. Property taxes came in higher. We aren't able to get our rents to sort of the level that we want to. We need an extra I don't know, make up the number, 25,000 or 50,000 from everybody. What is your thought process on a capital call from an LP perspective? Um,
So it's about as bad as it could be. I hope not to have it. I hope never to have it. But if it was somebody who was honest all the way along, in other words, this wasn't a surprise. They'd been communicating, they'd been making good progress. They've been telling us, hey, listen, here's our struggles, here's our plan. We implemented the plan, here's the next phase of the plan. I would be more apt to say, okay, I'm going to double down and invest with you to hold on to the end and not dilute myself. But if you were one of these ones where, hey, go look at the PPM to see what the performer was on the original compared to actual, no, I'm not. I'm just going to cut my losses, hope that I don't get diluted too far, hope that we eventually sell, and I get at least my original capital back.
all right. Okay. So I think this is the last slide. How would you, if you were a general partner, I think we covered the LP. If you're a general partner, any advice on getting started right now?
Yeah. So again, join a mentorship program, whichever mentorship program they are. Find people in that group that are the opposite of you. We all like to go meet people that are the same as us, right? That think the same. You want to find people that are the opposite of you. I mentioned at the very beginning, I don't consider myself an analytical. I certainly understand how to analyze things, but give me an Excel spreadsheet and my mind kind of goes boom. But if you give me one that someone I trust has worked on, it's great. So I align myself with people that are really strong at underwriting and analytical things. So find people that complement your weaknesses, right? And then go create a team, right? So, and a team has all these moving parts, right? You want somebody who really understands the financial side of it, the operational side of it, the investor relations side of it, and build your team out of that, because real estate is a team sport and you need those people. And that's what you now can say, okay, we've got this complete unit. Now I feel comfortable, and they all have the same values as me. They just have different skill sets, right? And their values are our tenants come first, the team and the employees at the location come third or second, investors come third, and general partners come fourth. A lot of people, general partners come first, investors come second, tenants come third. I want people that are trying to create great places to live where people feel valued as tenants. I always say I want to have an apartment complex where somebody refers to it as come to my home, right? It's very important to me. And I've seen several people implement that and really, really do a good job of that. And that's huge value. But you need a team to do that, right?
So I like that quote. So tenants first, employees second, investors third, GPs fourth. Is that right?
Yeah.
Okay,
Yeah.
perfect. And I wanted to maybe ask also, I mean, I don't know how I love Merrill's quote around you like the post before it's even posted, but who do you who do you follow? Maybe give me like your top 5 people you follow right now. Like and yeah.
Yeah. Obviously Merrill and John and Revision, the group that they've done, I follow those guys a lot. Also, I follow Sandhya Sachardi. I met her at one of my very first calls I went to, and I went, wow. I'll be honest, that's what turned the light bulb on. She talked about giving people turkeys at Christmas, back to school packs for kids that were going, and it just completely blew my mind. And I follow her quite regularly. I also follow Gary Lipsky a lot, and I just because I'm so fascinated with asset management, and what are they doing within the space. Those are the real people. And then I've got a lot of there's a whole bunch right after that that I do watch regularly, and I make sure that I pay attention to what they post.
Well, I appreciate you coming on today. We had spoken a little bit, but I appreciate everything that you do online and coming out to the conference and just sharing everything that we put out a lot of times. So,
Yeah, well, no,
what's
it's when you produce good value, it makes me look good to share your stuff and say, hey, this is, because again, it's getting all of that information out to people so that they can make educated decisions about their investments, right? You want people to feel very comfortable, right? As we all know that real estate's better than the stock market and all these other things, but we still don't get that comfort level. So providing this value and these things to look at help provide that comfort level for people so that they can build financial independence.
and what is the best way for if people want to set up time, whether to talk to you about LP stuff, GP stuff? What's the best way for people to reach you?
Yeah, so my website is niagara-investments.com. My email is ktt@niagara-investments.com. And LinkedIn is a really good space to look for me. Just it's K Trevor Thompson on LinkedIn. And then if you mention something like saw you on a podcast, I always accept, always engage, always happy to set up a time to talk.
Well, I appreciate you coming on today,
Oh, it's my pleasure. It was a
and
lot of fun, actually. I was
and
nervous, but this is great. You did a good job.
well, I appreciate it, and hope to see you. I'll probably be at one of those conferences you mentioned earlier, and if not, I'll see you on LinkedIn shortly.
Awesome. Thanks. Take care.
All right, I'll see you.